Good evening. Ira Epstein with your metals market wrap-up for this Monday, and we are now at the 13th of April, 2020, and the time just after 5:50 p.m. Central Time. Well, the gold market, and we're already into Tuesday trade, it's acting well. It's 1764. Silver's making up some lost ground. Silver took a beating against gold today, so it's making up some lost ground. Copper's impressive. I've moved to the July copper now, but it's acting strong. Dollar index was down, but probably get a bounce tonight as most of the foreign currencies are open a little bit lower. Obviously, in the U.S., the question is, when's the economy going to get better? When are we going to open? When is COVID coming to an end? Blah, blah, blah. It's the same question everybody in the world has, because everybody's going through this at the same time. The thing about the gold market is it's recognizing that central banks around the world are going in. Be it that they're lowering bank reserves, they're actually adding money, they're buying more instruments they may not have ever touched. They're doing it. It's not lost on the gold market. It's recognizing it. But I'm seeing a pattern. Buying the rally in gold is where the problem seems to come in. Because each time you buy it, you seem to get one of these $40, $50 pullbacks, and that's the hard thing. And I think you have to adjust your trading style to consider that. Doesn't mean that one of these times buying it won't continue, but it's a pattern I just can't get away from seeing. It's right in front of us. Now, when we take a look at a weekly chart of closes, you're in an upthrust. You've gone literally from 1484.60 and just kept going up on weekly closes, almost straight up. You can see that. So here we are with a rally of what, $280, something like that, $260? That's a pretty big rally. As we look at where we're at right now, this is the daily bar chart. You didn't quite tonight take out the high, but this is the highest high we've had in a very long time. So let's not forget, this market's acting well. And some people are going to say that if you look at the pattern, you have a shoulder right here, this whole area, consider this a shoulder. Then it drops down and forms a head. Comes back, forms another shoulder, and now it is broken out. So one of the ways that traders look at this, they're going to look at the low here. Let's call this the 1450 level, just for the sake of discussion. The low there. And up here, the 1700 level. Again, for the sake of discussion. You got $250 in there from the high to the low. They attach that to here, and they'll take from the 1700 and add 250. And they'll say that an inverted head and shoulder count comes in at $1,950. Remember, I told you that. That's what they're going to talk about. What would break the pattern is getting back under these lows. As long as they're not done, they're considered live and viable. That's what chartists will start looking at. You get to see that a little better when the swing line's on. Think of that as the shoulder, the head. You flip it over, and that gives you an idea as to where the count takes the market. Pattern, by the way, bullish. Higher lows, higher highs. You're over the 18-day average of closes. The moving averages are lined up bullish with the shorter term 18 over the 100-day, the 100 over the 200. Where's the market found resistance? Right in the classic case of the upper Bollinger Band. It backed away. Now remember what we talked about, what I just said. This market seems to be rocking and rolling. Here you got up to a high of 1742.60. You broke back by the end of the day $70 and closed near the lows. You followed through the next day, and then the market took off. So what I'm learning, every market has a characteristic to it, is that buying those rallies for the follow-through, and forget it, I would never have you buy into a Bollinger Band to begin with, but buying any part of that rally, you got to be careful. You need to buy it on the other part of the slope. The question is, are you actually going to buy it lower, or is it going to move out on you? And that's going to be the hardest part. In terms of momentum, well, let's take off what we're at tonight. So we finished Monday with both numbers in the slow stochastic over 80. They were over 80 on Thursday. They weren't on Wednesday. So we got Thursday, Friday, no Friday. Remember that? Good Friday. Got Thursday, today, and today being Tuesday's trade will determine if we get the embedded reading. That's my point. You need 3 days with both numbers over 30. Then The 3-day average of lows become a very important number, but teach that in the charting course, just throw that out for you. When we look at the gold-silver ratio, a nice correction today, and I mean that was rather brutal because the market had been down to 107 ounces and then you jumped up to 111, nearly 112 ounces of silver you needed to get 1 ounce of gold, and slipping back a little bit right now. Okay, not enough there for me to get excited about. What is silver doing with embedding? So we can't count today because we don't know where the market's going to finish, but we can count the end of trade on Monday, both numbers over 80. Thursday, both numbers over 80. Not on Wednesday. So we've got two of the markets, gold and silver, could embed. Embedding's powerful. Embedding sets up two plays. Number one, you're looking until it loses the embedded reading that the pros, I think, will buy the market looking to drive it higher until that reading is lost. When it's lost, that means after it embeds, if the red line closes down for minimum 2 days, but 1 day generally shakes everybody out. The second day is just a confirmation, could lead to a move back to the 18-day average of closes. In the copper, you're over the upper Bollinger Band. So you had a strong up day today. You can see that just as the market finished here. We finished 231.95. Trade was unable to push it back under 231.06. Markets only stay 5% of the time outside of Bollinger Bands. So the question is, in this market, now that you've climbed from right here, under $2, is this enough where the market's going to run out of some momentum? The trend is up, the bias is up, you're very overbought and not embedded. I think the pros are taking money off the table against the Bollinger Band. In the platinum market, will you get an embedded reading? Again, we got to take off today because we don't know where it's going to be. So Monday, it finished both numbers over 80. You can see that it did so on Thursday. And what about Wednesday? Very important day tomorrow. I looked at this just before I was doing all this. And then in the palladium market, well, you've got divergence. You've got momentum trying to turn down. You've got the bias up, no trend, and the battlegrounds, the 100-day average of closes. If the market breaks through that, maybe it goes to the 18 for support. If it closes under both, maybe it's a flip over of the trend of this market, which had been up and now is consolidating sideways to figure out what next. Last, the dollar index is still in a bearish camp here as I see it. Lower highs, lower lows, but oversold. If the market were to let go to the downside, we have a combination of support between 97.85 to 97.60 and a half. Because it's oversold, I'm not convinced the pros are going to get aggressive to the downside here. Put it all together, that's the game plan. One of the things that we use in ideas is profitable trading strategies in any market. Now, this was put together by Modern Trader, and it's a neat, older piece. And it gives you ideas how to trade, the basics of it. How do you work with it? But then you get some of the flat base patterns, what's a crowfoot, 10 successful trading rules, how to forecast with caliber and affinity, different ideas that were around, and you get to play with them. But what I love about the magazine is that it offers a lot and it offers it in detail. So this particular piece, if you take a look and you see what they do, it's all kinds of examples in it. What works in areas, it explains, like we're talking here, congestion right now. What's the market doing? The sideways action, like in the palladium market. The different trading rules that traders come up with. Disciplines are always good. Without them, the market waits for you to break them and you get into trouble. How do you get this? Go to our website. You'll see free offers on the bottom right, plus plenty of other ones you can choose from. You can call my staff, they'll get it to you right away, or you can click right up here. You'll see this icon. Click there, it'll take you right to that page anyways. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.